Hey everybody, this is Kenny from Trade Tips, and in this video, we're going to be talking about how I chart key levels in order to find the best trading opportunities. Now, in this video, we're going to be looking at Tesla and on the daily chart. And what I like to do, guys, for when we look for these key levels, is I like to look for areas of compression. So areas of maybe some other people call it consolidation, where price goes in a tight range and then moves up dramatically. So we're going to go ahead and extend this area, and we're going to see if price ends up hitting this key level. And what I like to think is that banks and institutions are the ones that are moving the markets. So in my head, what I'm kind of thinking is that if price ever does resume to go back down here, and these guys have like maybe some unfulfilled orders that they have left here from the past, that these orders are going to get filled, and once these orders get filled, they're going to resume taking the price up in the markets. So anytime we do see a fresh key level getting taken out, we're going to actually delete this as a key level, and then we're going to redraw some new ones. So watch out for that whenever we come by a new key level. Um, so that never happened yet. So we're gonna keep this onto the chart, and we see a little another minor compression here. So we're gonna go ahead and take this and chart it out. And anytime you see a gap, we're gonna note this as a level of importance as well. And these key levels are so important to the market for some reason that they end up getting like filled like almost all of the time. Like at least like 80% of the gaps that I have seen end up getting filled. So typically, I would probably say that these gap fills have a higher level of importance than these gray area key levels. So we're gonna go ahead and continue on and see if we can see like any peaks or troughs where we can see price move up and reject. And in this case, we do. Price compresses here, and when I say price compression, sometimes I mean that even intraday you get these little doji candles. So you get some small candle bodies, and when you do see these small candle bodies, what you guys can do is go from either the bottom of the wick to the top of the wick, or you can go from the bottom of the candle body to the top of the wick. And, either way that you guys draw it, it's up to you guys' discretion. Now, there is no strategy that is perfect. So, this is just kind of one of the ways you can just find some of the best entries, and combine with maybe other strategies. And if you find some areas of confluence, are going to be some of the best ways for you guys to make some huge cash with these um, trading opportunities. Going on from here, let's say that we did end up deciding to go short from this trade. If we were going to go short here, we do see kind of a minor level of compression right here. I'm going to take it from the bottom of the top of the candle body to the wick, and if we do go short here, let's see what would happen. And we actually do get price filling up here, and because this is no longer a fresh level, we're going to go ahead and remove it, and we just made a good solid, what is that, maybe 100 point opportunity just by going short and trading off of these key levels. So right here, I would call this like when we're not in a position of any sorts and we are not at a key level yet, I call this no man's land. Now it can literally go up or down from here, we literally won't know. And so instead, what I like to do is instead of kind of guessing where the price is going to go, I like to wait for the next key level to hit before I get into another trading opportunity. So right here we have remember I talked about compression. Well, we do see a little bit of compression here. So this could be a key level, and we also have a gap between here and here as well. And so these can be key levels here as well. So if any of these levels get hit, we're going to possibly look for trading opportunities if we get movement to the upside here. There you go. So we do end up getting movement to the upside. And so this level got hit, and this level got hit. And so if we got anywhere, if we see that this key level got hit, this would have been a great short opportunity for us. Now, because here in Trade Tips, so we trade options, we're actually going to go ahead and get puts. And remember, so this key level got hit. We're in now on a short. These never got hit, so we're going to leave them. And so let's pretend like we got into a short and see what happened. So we saw this movement go down. Let's see what happens next. Oh, and I forgot. Whenever a key level gets hit, we always have to redraw a new one. So this is our next level of compression. And so we draw this as a key level, and let's see if we get price to either move up here and reject, or just keep going straight down. Let's see what happens. Oh, and there we go. We end up getting a price to come up before rejecting here. So we can either hold on to our shorts, or we can actually add in another short here. So that would have been a great opportunity. And because this is not a fresh key level anymore, this gets removed and we got a new fresh key level here. And now we're in, let's say, 2 contracts short on this Tesla position. What I can look for taking profit is either this area of compression here, or I can take profit um, right all the way down here to this green level. I'm going to go ahead and say that price comes down here to this green level because market loves to hit these gap fill levels. So let's go ahead and say that we hit this as a short and price comes down. There we go. We ended up taking profit probably in this area or this range on this green level. And let's say the green level is supposed to be right there. Well, this level got taken out, and this would have been a great time to take profit. So that would have been maybe another good 100-point move. And if we got in long, this would be our trade right here. And this got hit as a key level, and or this key level was fresh, and now it's not. So we're going to remove it. And let's say we go long here. And if we ever see maybe momentum die off or anything like that, oh, there we go. Then, we would have probably taken profit here. Still, even if we took profit on this red candle here, maybe a good 50-point opportunity here on Tesla. Okay, now let's say we're zeroed out on our position and we're in no man's land. We're going to wait for the next opportunity. Do we get the gap fill? Yes, we do. So this green level gets taken out. And let's say that we want to take a stab at it and let's go long from here. We weren't in a position and now we are. Let's see if we can get price to move up here. Okay, and there we go, and we end up getting price to move up there. This key level never got hit, so there are still kind of like these unfulfilled orders that are still right here. So we're gonna leave that be, and right there, in 2 days, 3 days, we could have had a great profit opportunity right here. Maybe another 100-point move with this trade. You could have exited right there, or you could have held on to it till we hit the next key level. So this key level got taken out, this key level got taken out, and technically this one got taken out. So we would have been taking profit somewhere around here. And again, if you wanted to go short, you could potentially go short here. And remember, once a key level gets taken out, we just draw a new key level right here. So area of compression, bottom of the candle body to the top of the wick. And let's say we're short. Let's see if we can make money on the way down. And there you go. Price moves down. So there you go, guys. Hope this all made sense to you guys, how I kind of chart these key levels. I'm going to draw a few more for you guys just as we're going through. But if you guys have any questions, let us know in the comments down below. This is typically how I like to trade the markets. Is that it's easy for me to just wait for these key levels to hit instead of guessing where price is going to go. um and in general, this is how I've been consistently profitable in the markets. um and so I also want to note here that, again, this is not an end all be all strategy. The strategy is not going to work 100% of the time, but it does work a majority of the time, enough to the point where you can actually stay consistently profitable in the markets. And with that being said, guys, if you guys want to get real-time trading signals, what we do is we'll literally text you when we get in and out of trades. We'll tell you literally what contract we get in, what strike, and what price that we get in, as well as all of our exits. So if that's interesting to you, check out the link in the description below. And with that being said, guys, hope you guys enjoy this video, and we'll see you guys next time.